Hello and welcome to Forex B with another video. In this video, I'm going to explain about dark cover cloud candlestick pattern. After watching this video, you will be able to identify, analyze, and to differentiate this candlestick pattern from other similar patterns. We will further discuss the psychology and formulation of trading strategy involving dark cover cloud candlestick pattern. So, a dark cover cloud candlestick pattern consists of two candlesticks which are contrasting in nature. This candlestick pattern indicates a bearish reversal trend in the future, and the prior trend to this candlestick pattern is usually a bullish one. To identify this candlestick pattern, a trader have to look for the appearance of two candlesticks at a trading chart, in which the first one is a white candlestick or bullish natured candlestick, which is followed by a bearish candlestick. The close and the open of the two candlesticks form a price gap. This gap is important to understand because it plays an important role in the analysis of this candlestick pattern involving the future bearish nature of the reversal. If we draw a midline between these two candles, the close of the second candle is always situated under the midline of the first candlestick. So the bottom line is, in a dark cover cloud candlestick pattern, a bullish candle is always followed by a bearish candle whose close is always situated under the midline of the first candle. Now you have understand the identification of a dark cover cloud candlestick pattern. It is time to analyze this candlestick pattern. We can analyze this candlestick pattern with the reference of gap, positioning of close of the second candle, and size of candlesticks. If the gap between these two candlesticks is significantly bigger, the chances of a bigger bearish reversal in the market trend are higher. If the close of the second candle is located nearer to the midline, the reversal will be smaller. If this close is at a distance from the midline, the reversal will be greater. If the size of the candlesticks is larger, there are chances of a bigger bearish reversal in the market trend. A trader might get confused while identifying this candlestick pattern on a trading chart because of the similarity of this candlestick pattern with piercing line candlestick pattern. But there is a significant difference that in a dark cover cloud candlestick pattern, the first candle is always a bullish one, while in a piercing line candlestick pattern, the first candlestick is always a bearish in nature. And the second point of differentiation is the close of the second candlestick is always under the midline of the first bullish one, while in case of a piercing line candlestick pattern, the close of the second bullish candlestick pattern is always positioned above the midline of the first bearish candlestick. Now you have understand the identification and analysis of dark cover cloud candlestick pattern. It is time to understand the market psychology and formulation of a trading strategy involving dark cover cloud candlestick pattern. We know that a dark cover cloud candlestick pattern is a bearish reversal pattern. It means that sooner a market is going to take a dip and bears are going to take control from the bulls. In order to formulate a trading strategy, the best trading setup involving a dark cover cloud candlestick pattern is to make your entry just under the second bearish candle, and in order to stay at a safe side to avoid the reversal of the prices, you have to place your stop loss just above the second candle. After observing a dip or reversal of bearish nature in the market, you can take significant profit. It is time to move towards the most important part of this video, where we are going to understand dark cover cloud candlestick pattern from a live trading chart. If we have a look at these two candlesticks, in which your first bullish candlestick is followed by a second dark candlestick, if I draw a trend line at the midpoint of the first candle, you can see that the close of the second candlestick pattern is under the midline of the first bullish nature candlestick pattern. If we look at the market is taking a dip at this point as the prices are going downwards, indicating a bearish reversal trend. In this case, the price gap is significantly smaller, so we can see a small reversal in the market is observed. So this is a dark cover cloud candlestick pattern, and as we can see, you can significantly observe a bearish natured reversal in the market. The best trading strategy is to place your entry level just below the first bearish candle which follows the bullish one. Place your stop loss just above this candle and you can take your profits. If we further explore this market, we can look here that here is another dark cover cloud candlestick pattern. The formation of this candlestick pattern is always followed by a downtrend. Here are two more examples of dark cover cloud candlesticks. So in this case, the close of the candlestick is very close to the midline, while in this case, the close is significantly at a lower point as compared to the midline. So if we compare the market reversals, in this case, market shows a bigger bearish reversal, while in this case, reversal is significantly smaller. So as we have understand earlier from the analysis of this pattern that if the close is near to the midline, the reversal will be smaller, while if the close is at a significant distance from the midline of the first candlestick, the reversal will be greater. And so the best setup for trading is to place your stop loss just above the second bearish candle and entry level just below the second bearish candle. I hope you have understand how to identify, analyze, and formulate a trading strategy involving dark cover cloud candlestick pattern. You can further enhance your chances of a successful trading involving dark cover cloud candlestick pattern with the use of trading indicators. In order to understand more about trading indicators, you can visit our website. Don't forget to like, share, and subscribe. Thank you very much for watching this video.